Alexis.
Okay. All right, so that was a really interesting. I think the focus really is on the US and the US dollar, and I've got a couple of articles. I'm just going to flash a couple of headlines, to start off with, and I kind of think that it will be interesting. It will be interesting in the US dollar next week. Very simply is a couple of articles that has just come up just yesterday, today, whatever has been filtering through the media. So we have a little bit of unhappiness with the US government because of the very high debt. We have worries about this actually was written, I think, 2 days ago. Janet Yellen was warning of a possible October default on US debt. We have over here, articles coming out about how the taper tantrum is sparking a bond bloodbath, and again, the focus is really on U.S. debt. So I think the question mark is we have we are in kind of a period where the US is kind of too big to fail, right? Because if the US goes down, it will bring everybody else with it. So the question is, what are the measures in the next 2 to 3 weeks, that the government will do to kind of solve this issue, find a solution, or at least try to convince investors that this is not going to happen, this will never happen, etc. So I think we are probably looking at a more sentiment play next week where I think it's a 50-50 where there are a bunch of traders who feel that the US is too big to fail, where governments will have to step up to not allow the US dollar to crash. But then when we look at the technical parts, when we look at the charts, when we look at what the actual story is telling us, it is a question mark because as of, I think I've got an article here in terms of how much the US actually owes its debtors, which is now Japan and China. So I think the sentiment is really on, I think, US debt in that sense. It's now about 107.6% of GDP. If we look a little bit close up on how the debt has grown in the last, let's say, 25 years. All right, this is a 25-year bar chart. The debt has been higher than ever. Okay, it has not gone down at all since a short dip in 2015, right? And I think there's a lot of worry that what happens if the US defaults or the US cannot pay their debt. So I agree with Julian in the sense that I think it's very difficult for the US to increase its interest rates anytime soon, and I think they have bigger problems in the basket in that sense. So when we look at the US dollar, my question then is: are we reaching at possible technical levels where there might be potential shorts? And the first 2 weeks, or moving forward, the next 2 weeks, it will be more of a sentiment play where we have retail traders and we have smaller traders coming in and starting to do that knee-jerk reaction that they look at the news article and say, oh, US dollars might go into debt, we should sell the dollar, or that kind of knee-jerk reaction. But the question is, what I'm really interested to know is, what is the solution to this, and what the US government will actually come up to kind of assure that this will not happen. I mean, it is in the news, and I'm pretty sure that they won't release it in the news unless there's something in the works, right? Because if not, it will kind of create a waterfall. We will probably reach like a waterfall panic situation unless they haven't really learned their lessons since 2008, right? So my question is, what are the levels that we should kind of look out for? We can, like what Geoff does, trade short to trade long. And what I am potentially looking out for the next 2 weeks is possible shorts, but long term, I still am a little bit bullish the dollar. All right, mainly, very simply, is all things in tune, right? The current debt, the current reserve currency is still the USD, right? The current most tradable currency is still the USD. So unless it's confirmed something drastic happens, right? How there is going to be a flaw, and I am going to try to see if we can kind of go down to the floor and then pick it up from there. So when I look at Julian's S&P, and that lower low has appeared, and this is on a weekly. Let's go to just a daily. We don't need such a long view on this. So when the lower low has started to appear over here, right, it is a question then what happens then when this sentimental news that's coming up, will it be able to, do that, is done that break and retest. So this is a technical move already. And what's going to happen if it does find resistance over here and hit towards the downside? How would that affect our USD, and how will we be able to pick up further short positions on the USD before finding that floor to wait for news that comes up and says, okay, the US has got it sorted, they have fixed their debt problem, or they have a solution to it in that sense. All right. So I think next week will be really interesting. We will probably see a lot of consolidation and a bit more volatility in the USD, mainly because if you are nearing the year end, it's already the last quarter of the year. Hedge fund managers or fund managers that are holding to stock portfolios, they are going to be doing something to kind of make sure, number one, their profits they've earned so far is safe, or they want to take profits, or they need to start to get ready for their accounting for the end of the year in terms of their investment reporting, right? So I feel that the next couple of months will be interesting as the big boys are fighting to decide where this is going. And the moment that first trigger is pulled, I think we are going to see a domino effect. Everybody else is going to follow. The human sentiment is going to follow. So I am looking for more of a sentiment play in the next couple of weeks. So I'm looking to short the dollar first until something comes out in the US that says anything otherwise, right? But all in all, it doesn't look like the US is having a good time in this period. A lot of stuff is going on there. But what do I short the dollar against? Well, for now, I'm going to avoid the euro until Germany finishes its elections. All right, very uncertain elections are progressing. We don't know who is going to take charge after Merkel, and Germany being one of the bigger economies contributing to the euro statistics. I think euro might be a bit flat next week. So other than the euro, I think the USD. The USD on the rest of the currencies is probably open for grabs. We have a bit of consolidation that's happening. I am potentially looking for dollar Sing to head back towards the downside a little bit, but dollar Sing it's a little bit slow, right? So taking some time. Dollar CAD is a bit affected by oil, all right? So it's affected by oil play, and we have oil actually peaking, hitting nice highs. That $75 high is almost there. So later on, I will also love to see what Ainslie has to share about this oil price and how it could affect our dollar CAD as well. So the currencies I am looking more towards is the dollar yen, dollar Swiss, all right? Dollar yen, dollar Swiss, dollar Sing, possibly the dollar Kiwi. There is some consolidation happening. We seem to have, there is kind of a resistance level that is hit. So I'll be looking for potentials of dollar shorts next week on the shorter time frames. And until, and of course, keeping one eye on the news and seeing what's the solution to their debt issue. So that's all for me this week. Over to you, Paul.
Yes, Alexis, that US dollar news is going to be big news over the next couple of weeks and perhaps early next couple of months, isn't it, Alexis? That is going to, this debt ceiling thing is going to come into play pretty seriously over the next period of time. So thank you very much.